You know, when I think back over my years in the market with all the victories, the failures, the fortunes made and lost, there's one rule I see almost every trader overlooking. And the strange thing is, it's not complicated, it's not hidden, and it's not even a secret. It's there, plain as day. But 99% of the people who walk into this game step right over it, as if it were a crack in the sidewalk. And do you know why? Because they don't want to face it. They'd rather chase something shinier. What's that rule? It's patience. That's the rule 99% of traders ignore. Patience. Not just the patience to sit in a stock when it's going your way, but the patience to wait, the patience to do nothing, the patience to sit on your hands while the market fools around and sets its traps. Tell me, have you ever noticed how hard it is to do nothing? How uneasy you feel when you're flat, when you've got no position, and the tape is ticking in front of you as if it's daring you to jump in. That's the itch every trader has. They think they need to be in the market every hour, every day, as if a stock can't possibly move without them riding it. That's the disease of speculation, this compulsion to trade. It's not the losses that kill a man, it's this itch to always be in. And if you don't master it, the market will break you. That's the truth. I can't tell you how many fellows I've seen who had brains, courage and money, and they still went under. Why? Because they couldn't wait. They had to trade. They'd grab at every little fluctuation as though they were starving men at a banquet table. But the market doesn't pay you for nibbling. It pays you for sitting tight when the moment is right. That's the real money. Do you believe that? Now, people will nod and say, yes, yes, patience, I understand. But the moment they see the ticker print a lively little jump, they forget everything. They dive in without a plan, without discipline, without waiting for the right line of least resistance to set up. That's why I say most traders ignore this rule. Not because they don't know it, but because they can't follow it. And what good is knowing a rule if you won't obey it? The market is nothing but human nature on display. It's vanity, it's fear, it's greed, it's hope, all spelled out in numbers. Do you suppose human nature likes to wait? Not a bit. Human nature hates to sit still. It wants action, it wants movement, it wants excitement. That's why the bucket shops made so much money in my early days. They knew people wanted to play all the time. They knew that if you kept the wheel spinning, the customer would keep betting. And the bucket shops took their cut, the public took their losses, and the whole machine fed on impatience. When I was a boy, chalking up prices in the bucket shops, I saw this truth before I even knew how to name it. The men who walked in there every morning, eager to bet on every wiggle of the tape, they lost. Not because they were fools, not because they were ignorant, but because they couldn't stop themselves from acting. The few who waited, who picked their spots, they had a fighting chance. But they were rare, and they're still rare today. Let me ask you something. Do you really think the market cares about your need to be busy? Do you think it will pay you because you're restless and want to see action? Of course not. The market only pays when you're right, and it only pays big when you're patient. That's the truth no one likes to hear. Because patience is boring. Patience doesn't make for exciting stories at the bar. Patience means you might sit for weeks without touching a share, and that feels like death to the average trader. I've had times in my life when I did nothing for long stretches. I wasn't out of the market because I was timid or lazy. I was out because the market wasn't ready to give me what I wanted. And when it was ready, I struck, and I struck big. That's how fortunes are made. Not by dancing in and out every hour, but by sitting and waiting until the big swing comes along. And when it does, you ride it. You don't snatch at it. You don't scalp it for a few points. You ride it until the market itself tells you the move is over. Doesn't it make sense that the hardest thing to do in speculation is usually the right thing? Think of it. Every instinct you have screams at you to act, to protect, to jump. But the money is made by going against that instinct, by doing what feels most unnatural, waiting. That's the trap. That's the rule almost everyone ignores. I used to say, and I'll say it again, it's never your thinking that makes the big money. It's your sitting. You can figure the market out. You can line up your reasoning, but until you sit tight when you're right, you'll never see the real profits. And you'll never sit tight if you don't have the patience to wait for the right setup to begin with. It's two sides of the same coin. The patience to wait for the right trade, and the patience to hold it once you've got it. Break either side and you're done. Now, let me turn it back to you. How many times have you gotten into a stock too early, just because you didn't want to miss it? You tell yourself, I'll get in now, and if it dips, I'll add more. Then it dips, and you add, and it dips again, and now you're trapped. Sound familiar? That's impatience. That's ignoring the rule. If you had waited for the market to confirm the move, you wouldn't be stuck. But you couldn't wait. You had to act. And now the market's teaching you the same lesson it's taught millions before you. I've been guilty of it myself. Don't think I'm preaching from a high horse. I've blown fortunes because I forgot my own rule. I'd let the excitement get the better of me. I'd jump too soon. I'd force the market instead of letting it show its hand. And every time I paid. The market always makes you pay for your impatience. You know what the real kicker is? When you learn patience, you also learn peace. Because you're no longer chasing every movement, no longer sweating every tick. You're calm, because you know you don't have to be in all the time. You know the market will be there tomorrow, next week, next month. You don't have to catch every little wiggle. You just have to catch the big swing when it comes. And that's enough. That's more than enough. Tell me, isn't it better to make one trade a month that pays big than 100 trades a week that wear you out and bleed you dry? But that's what the 99% do. They chase and chase, thinking activity equals profit. But it doesn't. It equals commissions, it equals mistakes, it equals ruin. The brokers love it, the tipsters love it, the bucket shops loved it in my day. But the trader himself, he pays for it every time. I want you to think about this. If the rule most traders ignore is patience, and if that rule is what separates the winners from the losers, then what does that tell you about your own trading? Are you in that 99%, scratching for action, or are you willing to step into the 1%, the ones who wait, who sit, who let the market come to them? Because that's the real decision you have to make. Not what stock to buy, not what tip to follow, but whether you have the self-control to do nothing until the time is right. The market doesn't care who you are. It doesn't care if you're rich, poor, smart, dumb, young, old. It only cares whether you follow its rules. And one of its biggest rules, the one most ignored, is patience. That's the truth. And if you ignore it, you'll be just another name on the long list of those who came, played, and lost. The market rewards waiting, not constant action. That sounds simple, almost too simple, doesn't it? Yet, if you look closely at the traders who fail, and they are the majority, you'll see they're not failing because they don't know how to read a chart, or because they never heard of risk management, or even because they picked the wrong stock. They're failing because they can't wait. They believe the market pays them for activity. They think the game is about always being in, always pressing, always catching every wave, no matter how small. They think their edge is in movement, when the truth is, the edge lies in stillness. Now, why is that? Why would waiting make money and constant action cost it? Let me tell you, the market doesn't move in a straight line. It doesn't give you one direction every day of the year. It spends most of its time going nowhere, marking time, consolidating, shaking people out. It's only once in a while that it makes the kind of big, clean move that can make your year in a single swing. But if you're too busy chasing every little twitch, you'll be tired, distracted, and broke by the time that real move comes along. And then what happens? You miss it. Or worse, you're too deep in some silly little position to take the big one when it comes. Think about your own trading. Haven't you ever jumped into a stock just because you were bored, only to watch it drift sideways or whipsaw you for a loss? And then, a week later, the stock you really should have been watching finally breaks out, but now you can't take it because you're nursing a wound from your last impatient stab. That's the cost of constant action. That's the trap that snares nearly every trader. Do you see what I mean when I say the market rewards waiting? The big money isn't scattered all over the tape. It shows up in pockets in certain moments when the trend is strong, the path is clear, and the line of least resistance is obvious. But those moments are rare. They're like gold nuggets in a stream. If you dig at every handful of dirt, you'll wear yourself out before you find the real nugget. But if you pan with patience, you save your strength for the real thing. I remember times in my own career when I did nothing for weeks on end. I wasn't afraid. I wasn't confused. I wasn't giving up. I was waiting. I was watching the market set itself up, waiting for the conditions to line up the way they always do before a big swing. And when they did, I struck, and I struck heavy. That one trade paid more than all the fiddling around could have in months. But to get there, I had to wait. I had to let the market come to me. Why don't traders wait? Because they don't like the feeling of being out. They think if they're flat, they're missing out. They look at the ticker, and every uptick feels like an opportunity lost. They can't stand the thought of sitting still, so they act, and every action costs. Commissions, slippage, mistakes. The market takes a little from them every time they give in to the edge. And pretty soon, the account is gone. Let me ask you something. Why do you think brokers love active traders? Why do you think they encourage you to trade more, to try this strategy and that one, to never stop moving? Because the house gets paid on every transaction. Your activity is their profit, and who funds it? You do. The market is built to exploit impatience, to feed on the need for constant action. That's why I say 99% of traders ignore this rule. They can't resist the temptation. Now, I'll tell you a story. There was a time when I thought I was smarter than the market, thought I could scalp a living by catching every little move. I'd be in and out 20 times a day, chasing a point here, 2 points there, and for a while, I even did all right. But when the big move finally came, I was out of line, overtraded, and undercapitalized. I missed it, and missing that one big move cost me far more than all those little scalps ever made. That was the lesson. The market doesn't pay you for your energy, it pays you for your timing. And here's something else to consider. Constant action wears you out. It drains you mentally, physically, emotionally. Every decision takes energy, every trade takes focus, every loss takes a piece out of your confidence. By the time the real opportunity comes, you're not sharp, you're not ready, you're not bold enough to step in with size. You're timid because you've been cut up 100 times by your own impatience. And so the chance passes you by. That's why waiting is not only profitable, it's necessary. It keeps you fresh. It keeps you strong. It keeps you prepared to act when the time is right. I want you to picture the market as a battlefield. If you charge into every skirmish, you'll be exhausted when the real battle begins. You'll have no ammunition left, no strength, no morale. But if you wait, if you conserve your resources, if you pick your spot, you can win the war with one decisive strike. That's the truth of speculation. It's not about fighting all the time. It's about fighting at the right time. Some people think waiting is easy. They think it means laziness or sitting back with no effort. But I'll tell you, waiting is the hardest work of all. It takes discipline to do nothing. It takes strength to watch the tape move without you and not jump in. It takes character to hold yourself back until the market confirms your line of reasoning. Do you have that discipline? That's the real question. Because if you don't, the market will expose you. It exposes everyone who lacks it. I used to remind myself over and over that the market is never wrong. Only my impatience can be wrong. If I lose, it's because I acted before the market was ready. If I win, it's because I waited for the market to show its hand. That's the only difference. The market doesn't care who I am, what I want, or how badly I want action. It only cares whether I obey its rhythm. And its rhythm is not constant action, it's long stretches of nothing, broken by sudden movements. And so, the reward goes to the man who can wait through the nothing, who can sit quietly while the rest chase their tails. The market will pay him, and it will pay him handsomely, because he was patient enough to let the move come to him. Think back to every great bull market you've ever read about. Did it rise in a straight line every day? No, it spent weeks building, resting, consolidating. The patient traders waited through the noise, and when the breakout came, they rode it. The impatient ones traded every dip, every rally, every feint, and most of them went broke before the real move unfolded. That's how it always happens. You see, the market doesn't hand out money for hustle. It hands out money for timing, and timing comes from waiting. Constant action is just a way to dig your own grave faster. The more you trade, the more you expose yourself to mistakes. The more you chase, the further you get from the real reward. But if you wait, if you have the courage to do nothing until the time is right, the market will pay you more than you ever imagined. So when I say the market rewards waiting, not constant action, I mean it quite literally. The men who wait get paid. The men who act constantly pay. And that's the line drawn in this game, the line almost no one wants to see. Sitting tight when you're right makes the big money. I've said it before, and I'll say it again, because it's the kind of rule that slips out of a man's grasp the moment he thinks he's mastered it. It's not enough to be right about the market, not enough to catch the turn, not enough to buy the stock at the right time. The real test is whether you can stay put while the move unfolds. That's where the fortune lies. And do you know why most men never see it? Because they can't sit. They sell too soon. They clip their profits. They snatch at pennies while dollars are still waiting on the table. I've watched men all my life who were clever enough to read the tape, who had the courage to make the trade, who knew the trend was on their side, and yet they sold out at the first sign of profit. They were so afraid of losing what little they had gained that they never allowed themselves to see what the market really had to offer. Have you ever done that yourself? Sold too early, only to watch the stock march higher and higher without you? That's the sting every trader knows. And it's not because you were wrong about the market. It's because you couldn't sit tight. Now let me tell you the truth of it. The big money is never made at the start of a move. It's not made by catching the first point or two. It's made in the middle, in the thick of the swing, when the trend is running strong and the line of least resistance is carrying everything forward. But you'll never see that middle if you jump ship the moment you're a little ahead. You'll never catch the fat of the move if you settle for scraps at the beginning. The market is designed to tempt you out. Every rally has its little dips. Every bull market has its corrections. Every advance has its pauses. And those pauses are where most traders lose their nerve. They think, I'd better take my profit now, before it slips away. They forget why they bought in the first place. They let the tape shake them out. And once they're out, they rarely get back in. The move goes on without them, and they're left telling themselves they did the prudent thing. But prudence doesn't build fortunes. Sitting tight does. Think about the psychology at work. Fear is always louder than reason. You see a profit on paper, and suddenly you feel a pressure to protect it, as if it were a fragile thing that could vanish at any moment, and so you take it. You cash in, you feel relief, you pat yourself on the back. But what have you really done? You've cut yourself off from the real payoff. You've traded a fortune for a trifle. And worse, you've taught yourself the habit of grabbing too soon. That habit will bleed you more surely than any loss. Do you know what takes more courage than buying a stock? Holding it. Anyone can pull the trigger and buy. That takes a decision, yes, but it's over in a moment. Holding. Though that's a daily fight against your own nerves, against the noise of the market, against the whispers of other men who think they know better. Every day you sit tight, you're tested again. Can you endure the corrections? Can you resist the urge to grab? Can you trust your judgment long enough to let it pay? That's the real battlefield of speculation. I'll give you an example. When I made my fortune in the big bear market of 1907, it wasn't because I guessed right once. It was because I sat tight through the entire collapse. I had the position. I knew the line of least resistance was down, and I held it. Day after day, while the panic spread, while the market buckled, while men around me lost their heads, I sat. The profits grew larger than I had ever imagined, but I didn't grab early. I knew the move wasn't over. And because I sat, I made more money in a few weeks than I had in years of hustling. That was the lesson that burned itself into me. Being right is nothing without sitting tight. But do you think that lesson stayed with me forever? No, I had to learn it again and again, because the temptation to sell early never goes away. There were times later in my career when I forgot it, when I grabbed too soon, when I cut my own profits short. And every time, I looked back and saw how much I had left on the table. It wasn't the market that beat me. It was my own lack of patience. It was my inability to sit tight. Now, you might say, but what if the market turns against me? What if I hold and it all slips away? That's the fear that drives most traders out too soon. And here's the answer: you don't sit tight blindly. You sit tight when you're right. You sit tight when the market confirms your position, when the trend is clear, when the line of least resistance is in your favor. You don't sit tight in hope. You sit tight in alignment with the market itself. Do you see the difference? One is stubbornness, the other is discipline. So the real rule isn't just hold forever. The rule is, once you've judged the market correctly, once the trend is in your favor, once you're riding the move, then you sit and you sit without flinching. That's when the big money comes. If you try to be clever, jumping in and out, grabbing a little here, a little there, you'll miss the main event. You'll end up like the fellow who dug for gold, found a vein, but quit after pocketing a few nuggets, never realizing the whole mountain was his for the taking, if only he'd kept digging. Do you know what else happens when you sit tight? You simplify your trading. Instead of juggling a dozen positions, jumping from one to another, you let the market work for you. You put your capital to work in the right spot, and then you stop interfering. You let the trend do the heavy lifting. That's why I've always said it's not thinking that makes the big money. It's sitting. Once you've made the right decision, your best move is to get out of your own way. Let me ask you, how many trades in your life have you truly remembered? Not the quick in and outs, not the scalps, but the ones that really mattered. I'd wager it's the trades you held, the ones you sat on, the ones that grew beyond what you expected. Those are the ones that shape your account, that change your life. The rest, they're just noise, just distractions. Sitting tight is how you separate the noise from the fortune. And don't forget, sitting tight isn't passive. It's not laziness, it's work. It's the work of resisting fear, resisting greed, resisting the constant temptation to act. It's the hardest kind of work because it demands self-control. But it's the only work the market really rewards. The man who sits tight when he's right is the man who sees the full measure of what the market has to give. The truth is, markets are designed to test your nerve. They'll rally just enough to tempt you out, dip just enough to shake you, churn just enough to make you doubt. That's their way of weeding out the weak hands, and most traders fall for it. They sell into the first rally, they panic into the first dip, they fold under the pressure. But the strong hands, the ones who sit, they survive those tests, and they're the ones left to collect the real reward when the move runs its course. So when I say sitting tight, when you're right makes the big money, I'm not offering you a trick or a secret. I'm telling you the plain truth of speculation. The money isn't in the thinking, it isn't in the acting, it isn't in the grabbing. It's in the sitting, and that's the one thing almost no one has the nerve to do. Jumping to early ruins more trades than bad analysis. That may not sound as dramatic as being wrong about the entire market, but it's the truth every trader learns, usually the hard way. A man can study the tape, understand the line of least resistance, read the sentiment, and still go broke if he can't control the urge to act before the market confirms his judgment. The biggest danger isn't being wrong, it's being right too soon. Because when you're right too soon, you're still wrong in practice, and the market doesn't pay you for being early. It pays you for being timely. Why do traders jump too early? Impatience, plain and simple. The stock looks strong, the tape looks lively, and instead of waiting for the confirmation, they rush in. They buy before the breakout, short before the breakdown, and then they sit there, watching the market move against them, and they say, "But I was right!" I knew this was going to happen. Maybe they were right in theory, but in practice their capital is tied up, their nerves are strained, and usually they're shaken out before the move ever gets started. Have you ever done that yourself? Bought too soon, only to sell in disgust right before the market finally went in the direction you knew it would? That's what I mean. The tape never rewards guessing. It rewards waiting until the market shows its hand. And yet, most traders can't wait. They believe being early is the same as being smart. They think they're outfoxing the crowd by anticipating the turn. But do you know what anticipation really means in the market? It means taking losses. Because the market is never obliged to move when you want it to. You can be right about the direction, but if you're wrong about the timing, you pay just the same as if you were completely mistaken. There were countless times in my early days when I jumped ahead of the move. I'd see a pattern forming. I'd feel certain the stock was about to run, and I'd plunge in. And then what would happen? The stock would hesitate, pull back, retrace, do anything but what I wanted it to do. I'd sit there, losing money while waiting for my prediction to come true. Most times, I couldn't bear it. I'd cut the trade, take the loss, curse my luck. And then, not long after I was out, the move would come. I was right about the market, but I was wrong about my own impatience. And in speculation, impatience is more expensive than ignorance. Let me ask you, what's the difference between a fool who buys at the wrong time and a genius who buys too soon? Nothing. They both lose. The market doesn't care how clever your reasoning is. It doesn't care if you've read the conditions correctly. If your timing is off, you're wrong. That's why I always say, it's not about being right. It's about being right at the right time. That's what separates the men who make fortunes from the men who lose them. The irony is, most traders don't realize they're ruining themselves by being early. They tell themselves they're bold, that they're ahead of the crowd. They think that buying before the breakout is proof of superior judgment. But what it really proves is they lack discipline. They can't wait for the market to confirm their line of thought. They want to be smarter than the tape, and the tape punishes them for it every time. I've seen whole fortunes lost this way. Men with deep pockets, sharp minds, and all the courage in the world still manage to ruin themselves because they jumped too soon. They weren't content to wait for the market to tip its hand. They insisted on playing profit. But the market has no respect for profits. It has no reward for the man who says "I told you so" after losing his stake. The only reward comes to the man who holds back until the time is ripe, then moves when the odds are with him. And the cruelest part, jumping too early often leaves you too weak to take the real move when it comes. You've tied up your capital, you've drained your patience, you've bruised your confidence. By the time the breakout actually happens, you're out of line, undercapitalized, or simply too demoralized to act. So you miss it entirely. Being early doesn't just cost you the first trade, it often costs you the whole opportunity. Think of the market like a fruit tree. The fruit doesn't ripen on your schedule. You can't force it. If you pick too soon, what do you get? Hard, bitter fruit that's no good to eat. If you wait until it's ripe, the reward is sweet and plentiful. Most traders are fruit pickers who can't wait. They pluck at the first sign of growth, and then they wonder why the harvest never pays. But the few who wait for ripeness, they collect baskets full. Now, don't mistake me. I'm not saying you should hesitate forever, or wait until it's too late. That's another kind of mistake. What I'm saying is, the tape always gives you signs when the move is real. A stock in a strong position will confirm itself. It will break through resistance, it will move with volume. It will show you that the line of least resistance is open. That's when you act, not before. You don't gamble on what might happen. You trade what is happening. Have you noticed how the market always gives you a second chance? People rush in too soon because they fear missing out, but the truth is, a real move doesn't leave without you. It sets up, it confirms, it gives signals along the way. There's no need to jump before the gun. The race doesn't start until the market fires the shot. If you sprint before then, You're only running yourself ragged while the real competitors are still at the line. I can't count how many times I've watched the crowd get fooled by a head fake. The stock starts to stir, traders leap in, sure the breakout is here, and then the market pulls back, shaking them out. They sell in disgust, and then, once they're gone, the real breakout comes. That's the market's way of testing who's too eager. It punishes the early birds so the patient few can collect without competition. The market loves to punish the overeager. That's its oldest trick. Do you see how dangerous it is to let impatience push you ahead of the tape? You not only risk your money, you risk your judgment. Every premature trade eats at your confidence. And confidence is the one thing you can't trade without. A man who has been burned by his own impatience too many times starts to hesitate when the real chance comes. He second guesses, he doubts, and so he misses it. That's the hidden cost of being early. It ruins your ability to act when it matters. So what's the cure? The cure is discipline. The cure is telling yourself, I don't have to be the first man in. I only have to be in when the market confirms my idea. The cure is remembering that the market doesn't pay you for calling the turn.